Today, I'm going to tell you everything you need to know about ETFs. If you don't know what they are, how to buy them, or what the risks and fees involved are, in today's video, we're going to be covering all that, and I'll be going over how ETFs fit into my personal investment strategy. If you're new to the channel, my name is Sheldon, and I've been actively investing and managing my own portfolio for a little over 4.5 years now, and I make YouTube videos talking about stocks. If you're interested in building your own stock portfolio, or if you want to stay updated with what's happening in the market, check out some of the other videos on my channel and let's build our portfolios together. But let's get right into it. An ETF is an acronym that stands for Exchange Traded Fund. The easiest way to think of an ETF is it's essentially just a basket of stocks that trade on the public market just like a stock. There can also be other investments like bonds or commodities inside an ETF, but for sake of the video, we're just going to say stocks. And the return of an ETF is going to reflect the average return of all the stocks that are inside of it. So let's look at an example. The Vanguard S&P 500 ETF, which is traded under the ticker VOO, is one of the most popular ETFs because it aims to simply just track the market and it has some of the lowest fees. We can see it is made up of pretty much every stock in the S&P 500, so buying shares in the fund, we get exposure to pretty much the 500 biggest companies in the world. For example, we can see that Microsoft takes up 7.23% of the fund, Nvidia takes up 6.61%, and Apple takes up 6.6%. And basically, every stock in the S&P 500 is going to take up a small percentage of the fund. It's also interesting that the top 10 holdings in VOO make up over 35% of the total asset value in the fund. And since all the biggest companies in the world are tech companies, you'll be getting a little bit more exposure to tech than any other industry, at least in this specific ETF. But this is just VOO. There are many other types of ETFs out there, and you can get one that tracks pretty much anything that you can think of. Another popular ETF is QQQ, which tracks the NASDAQ, but you can also get ETFs that track space technology, healthcare, renewable energy, industrials, growth stocks, value stocks, real estate, materials. I think you get the point. It's also very easy to buy ETFs. All you need is an online brokerage account like Fidelity or Robinhood. Or if you live in Canada, you can use Wealthsimple or Questrade. Basically, if you can buy stocks in your account, you can probably buy ETFs as well. One of the most important things to keep in mind when buying or researching ETFs are the fees associated with the fund. When you're doing research, you're going to see something called the management expense ratio, or just MER, or just expense ratio. And the expense ratio is a percentage that indicates how much of your investment will be deducted as annual fees. So if you have a 0.03% MER on a $100,000 investment, you're only going to pay $30 in annual fees, which is why ETFs are so attractive to investors, because your typical management fee to invest with a financial advisor could be over 2%, and over 2% on a $100,000 investment is going to be $2,000 a year instead of $30. Then you compound that for a few decades, and you could have the difference of well into the hundreds of thousands of dollars, if not the millions. One thing to note here is that you're never actually going to see a charge or a deduction from the ETF in your brokerage account. I think pretty much all the time the fee just gets deducted from the total asset value of the fund. So that's how the fund actually makes their money. And when it comes to risk, generally an ETF is going to be way less risky than buying an individual stock, because you're getting that diversification of having multiple holdings in the fund. But the more narrowly focused the fund is on a specific sector, it's going to be higher risk and there's going to be higher chance for price volatility. Overall, because of the reduced risk with ETFs, it makes them such a great starting point, and it's the type of investment that I would recommend to people new to investing, or people that don't want to pick individual stocks but also don't want to get absolutely screwed over by the bank. But a quick tip if you are into individual stock picking like myself is you can actually use ETFs as a good way of doing research. It's a pretty good way of seeing how an entire sector is performing when compared to a specific stock in that sector. For example, if we look at the iShares Industrials ETF IYJ, we can get a good idea of how the industrials market has been trending. And if we want to do research on a specific industrial stock like Caterpillar, we can compare how well it's performed to the ETF. You can also look at the PE ratio of the ETF and Caterpillar, and from this we can conclude that Caterpillar is currently trading relatively cheap, at least when you compare it to the rest of the industry. But now let's talk about how I personally invest in ETFs. So if you follow the channel, you might know that roughly 40% of my entire portfolio, or as of today, around $24,000 is in ETFs. The main fund that I owned is VOO, and the reason is basically for the stability. When I started investing, it was strictly in stocks and I didn't own any ETFs. Then in 2022, the market really crashed and my portfolio got absolutely leveled because I was investing like an idiot. And since then, I have focused on building a portfolio that is a little bit more defensive if the market was to crash. This strategy might continue to change into the future, and I can see myself getting back to holding 100% stocks further down the line, but I started buying VOO at a pretty good time, and I can't really complain about the returns that I've got so far. The reason there's two of them right here is because they're in separate accounts, but in one account I'm up 33% and in another account I'm up 39%. So I'm sitting on a couple $1,000s of unrealized gains just from buying VOO. I personally wouldn't want a portfolio 100% in ETFs because I like to pick individual stocks, and I think that in the long term, I can beat the average return of the market with my stock picks. But like I said before, if you don't like picking individual stocks, ETFs can definitely be a great choice for you. But to sum everything up, ETFs are essentially just a basket of stocks that trade on the public market just like a stock. There are many different types of ETFs and they're really easy to buy. All you need is an online brokerage account. The main fee that you're going to pay is the management expense ratio, and you're probably going to see it abbreviated as MER, and I personally think it's a great investment for beginners looking to get started in the stock market. If you got any value out of the video, or if you think you learned something, consider subscribing to the channel. We're slowly approaching 100 subscribers, so that's pretty cool. If you have any feedback or suggestions, drop them in the comments below. I wish everybody the best of luck on your investment journey. Peace.